This tutorial is a project of nonprofitaccountingbasics.org, a free resource developed by the Greater Washington Society of CPAs Educational Foundation.
Hello, and welcome to this webinar as part of the Nonprofit Accountability Task Force project of the Greater Washington Society of CPAs Educational Foundation. My name is Shawn Miller, partner with Caliber CPA Group in Washington, D.C. Today, we're going to have the first part of a multi-part series on internal controls for medium and large-sized nonprofit organizations. We'll start today's part by discussing what are internal controls, how internal controls are created, and what the objectives are of internal controls in general, and then continue with future webinars discussing internal controls for specific areas of operations. So first of all, what are internal controls? Internal control is broadly defined as a process affected by the entity's board of directors, management, and other personnel designed to provide reasonable assurance regarding the objectives in the following categories: effectiveness and efficiency of operations, reliability of financial reporting, and compliance with applicable laws and regulations. You'll notice that controls are designed to provide reasonable assurance, not absolute assurance. An internal control system is intended to provide reasonable rather than absolute assurance. There is a chance that errors or mistakes, bad judgments, limited resources, management override, or even fraud involving collusion will not be prevented even by the best internal control system. There are thousands of possible controls to select from for any internal control system. Now, internal control environment is a product of three factors: the internal control system, as we've just discussed, the control environment. And what is the control environment? So control environment sets the tone of an organization, influencing the control consciousness of its people, foundation for all other components of internal control. Some factors of the internal control environment include the integrity, ethical values, and competence of entities' people. And when we say entities' people, that includes the board of directors, senior management, entry-level staff, the vendors you do business with, and so on. Management's philosophy and operating style, the way management assigns authority and responsibility and organizes and develops its people, and lastly, the attention and direction provided by the board of directors. It is key to any strong internal control environment that the board of directors be on board with the controls and be actively involved in the control environment. The third factor related to your internal controls are the control activities. So we have the control system, the control environment, and now we have the control activities. Control activities are the policies and procedures that help ensure management directives are carried out. They ensure that necessary actions are taken to address risk to achievement of the objectives. They occur throughout the organization at all levels and functions. They include a range of activities as diverse as approvals, authorizations, verifications, and reconciliations, as well as reviews of operating performances, security of assets, and segregation of duties. So control activities, I believe, are what most people think of when they talk about internal controls. Who is approving a disbursement? Who is authorizing the pay rate for this person? And so on. Those are control activities. So how is this done? The now most effective procedures are those that have the greatest segregation of duties. The more people involved in a process, the less likely it is that an error or defalcation will occur. For example, the person who writes the checks should not be the person signing the check. The person who orders the service should not approve the invoice. The person with budget responsibility should also approve the invoice and code the expenditure. And we will get in future webinars more detail regarding disbursement controls and segregation of duties. But if you take away one thing from this webinar, I believe the most important internal control feature is segregation of duties. The more people you have involved in a process, the more oversight you have, the more checks and balances you have from an error standpoint, and from a fraud standpoint, the more likely it is that you'll detect the fraud, or you'll put the fear of detection in someone who is considering committing fraud and hopefully will deter them from doing so. How are internal controls established? Generally, management establishes a system of controls with input from the board of directors, perhaps outside vendors, whether it be legal, your outside CPA, your outside accountant, and it is very helpful to have an accounting manual detailing these procedures. It is also important that while management establishes these procedures, that they have buy-in from the board of directors and that they're approved by the board of directors. Everyone within the organization needs to be on the same page regarding the internal control environment and what internal controls have been established. Internal control system needs to be documented. The expected results or outcomes of the system and what everyone does needs to be put into writing and evaluated. One important thing to remember is that internal controls and the internal control document is not something you write and then put on the shelf and never look at again. The internal control environment is a constantly changing dynamic, especially in today's day and age where technology evolves at such a rapid rate. Your internal controls and the internal control system needs to follow suit. You need to make sure that your internal controls keep up with the technological advancements and any changes you have in operations. In addition, not just from a technology standpoint, but from an operational standpoint. Your organization may be growing. You may be expanding into new markets, new geographic regions. Your internal control structure and internal control activities needs to be updated to reflect any changes in the organization. It's a constantly evolving system. Your staff must receive training about the internal control system and their responsibilities in the system. This accomplishes two things. One, it gets everyone up to speed on what the controls are and what the objectives are. And two, it helps establish what's referred to as tone at the top, whereas the staff realize how important this is to senior management and the board of directors if they're willing to take time, train everyone on them, pull people out of their regular duties to understand the internal control and the importance of it. The organizational chart, accounting procedures, record retention, and so on must be maintained and updated on a timely basis to eliminate outdated information. One problem that comes in is, especially in medium-sized organizations, you may have a size and a volume of activities that need internal controls in excess of your resources. We've all seen this situation where you want to have another person involved in the control activities from a review standpoint or an approval standpoint, but your budget just doesn't allow for additional personnel. So what do you do in that standpoint? Now, it doesn't justify not having adequate controls, but what it may require is an organization to be creative in implementing adequate controls, involving board members, involving outside parties. And again, these are things that we will discuss in future webinars. So a successful internal control system needs to address a number of issues. And just a few of them in general are reducing the likelihood of losing assets by fraud or error, increasing the effectiveness and efficiency of an operating procedure, enhancing the reliability of financial reporting, and thus possibly reducing the cost of your audits. And then lastly, ensuring the compliance with applicable laws and regulations. This is especially true if you receive federal or state funding and you have additional laws and regulations to comply with. Because of all these choices, there's no one system of internal controls that's a perfect fit for everybody. You have diversity of missions and business models, various staffing levels, various levels of involvement by your board of directors, in addition to various levels of financial and accounting expertise and sophistication among your board, your management, and your staff. However, there are a number of common factors to be considered by any medium-sized or large-sized nonprofits, and again, in future webinars, we'll discuss those. Now, just to wrap up, let's review a couple things. What can internal controls do? They can help an entity achieve its performance and profitability targets and prevent lack of resources, help ensure reliable financial reporting and that the enterprise complies with laws, regulations, hopefully avoids damage to its reputation. So, in summation, it can help an entity get to where it wants to go and hopefully avoid pitfalls and surprises along the way. Now again, internal controls are not the panacea and the be-all, end-all. They are a system to help achieve a reasonable assurance that you're meeting these goals. So what can internal controls not do? So again, some people have greater and unrealistic expectations, look for absolutes, believe that internal controls can ensure an entity's success. That is, it will ensure achievement of basic business objectives or at least ensure survival. Even the best of internal controls can only help an entity achieve these objectives. It can provide management information about the entity's progress or lack of it toward their goals, but cannot change an inherently poor manager into a good one. And shifts in government policy or programs, competitors' actions, or economic conditions can be beyond management's control. Internal control cannot achieve success or even survival. What it can do is ensure that you have accurate information that is coming from your financial systems and your financial department to management and your board of directors to help you run the organization and achieve those goals. So again, that is a summary of internal controls, what they are, what they can do, and what unfortunately they cannot do. Again, in future webinars, we will dive deeper into internal controls in specific areas such as cash disbursements, payroll, cash receipts, and so on. Thank you for joining us for this webinar sponsored by the Greater Washington Society of CPAs Educational Foundation.